Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day. Releasing the report card for the first quarter of financial year 22-23, the government said that the country's fiscal deficit has risen lower than expected, notwithstanding a jump in government expenditure. It has kindled hope that the government could hold the fiscal deficit close to the target. Tax collections have also risen at a faster than expected pace. What else the quarterly numbers say about the health of the country's economy? Let us find out in our next report.
The central government's fiscal deficit for the first quarter of April to June period came in at 21.2% of the full year target of 16.6 trillion rupees. That is lower than expected due to higher tax collection and lower spending on subsidies. The deficit in the corresponding period last year was 18.2% of the FY22 budget estimate of 15.07 trillion rupees. The government said it is sticking to the current fiscal deficit target of 6.4% of GDP for FY23. Led by the ongoing economic recovery and an improvement in GST compliance, the net tax revenue in Q1 was 5.06 trillion rupees, that is 26.1% of budget estimates, compared to 26.7% last year. On the expenditure side, the government spending on major subsidies, including food and fertilizers, came down to nearly 68,000 crore rupees during April to June period, compared to about 1 trillion rupees a year earlier. At 9.48 trillion rupees, total expenditure in Q1 was 24% of FY23 budget size of 39.4 trillion rupees. In the first quarter, 23.4% of capital expenditure target of 7.5 trillion rupees was achieved. It was 1.75 trillion rupees compared with 1.11 trillion rupees last year. Meanwhile, on the economy side, India's 8 core infrastructure sectors grew in double digits in the April to June period at 13.7%. The disaggregated trends of core sector data are mixed, ranging from a muted 0.6% growth for crude oil to a robust expansion of 31.2% for coal. Apart from crude, steel and natural gas demonstrated single-digit growth. Retail inflation averaged 7.3% during the quarter. For each of the 3 months, it has remained above the RBI's upper tolerance limit of 6%. Both widening current account deficit and dollar strength have weighed upon the rupee, which depreciated 4.4% so far this fiscal. Current account deficit is seen at 3% of GDP in FY23 versus 1.2% last fiscal. As RBI defended the rupee against volatility, India's foreign exchange reserves declined from $606 billion at the start of April to $571.5 billion last week. India's merchandise exports during the first quarter jumped 22.2% to record $116.7 billion. Imports grew twice as fast, rising 47.4% to $187 billion.
Revenue receipts of Union government grew by 5.2% in the first quarter of 23. Although net tax revenue grew by 22.6%, the non-tax revenue contracted by 51.2%. The reduction or contraction in non-tax revenue is mainly due to 69.4% lower surplus transferred by the RBI to the Union government. On the expenditure front, while the non-interest expenditure grew by 3.5%, the capital expenditure grew by a robust 57.3% in the first quarter of 23. Sustained double-digit growth in capex will help the ongoing economic recovery at a time when the private investment is in wait-and-watch mode, mainly due to the monetary tightening and the uncertainty created by the Russia-Ukraine conflict. For a strong and durable economic recovery, it is important that the Union government sustains its capex in the remaining months of FY23. The recent fiscal measures, along with the higher nominal GDP, is expected to help the government not only meet but exceed its tax collection target. This, in my view, will give adequate headroom and fiscal space to the union government to undertake higher expenditure on the subsidy and also cover up the loss of revenue due to the cut in excise duties on petrol and diesel. On the whole, I believe fiscal deficit is expected to be a tad lower than budgeted.
The lowest RBI surplus transfer in a decade has led to the halving of non-tax revenue in the first quarter, which meant a weak 5% rise in revenue receipts. But going forward, robust tax collections will help the government absorb higher than budgeted subsidy outgo and revenue loss due to the excise duty cuts. Experts therefore say the government will comfortably meet its FY23 fiscal deficit target.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
India's promising quarterly numbers in the face of headwinds are a testament to the resilience of the economy. Let us now move on to another story of resilience. It is that of a Pune girl who charted her success in the US. Now 38, Neha Narkhede is being noticed in her country after she joined the ranks of India's wealthiest women. Narkhede was ranked 8th on the leading wealthy women list 2021 compiled by research firm Hurun. Let us find out more about it.
Co-founder and former Chief Technology Officer of cloud company Confluent, Neha Narkhede's journey from Pune to the Silicon Valley and from a software engineer to Forbes list was quite phenomenal. And why she is in the news now. With a net worth estimated at 13,380 crore rupees, Narkhede has been ranked 8th in the leading wealthy women 2021 list compiled by Hurun. She can now count herself among the likes of HCL Technologies chairperson Roshni Nader Malhotra, who topped the Hurun list for the second year in a row. Falguni Nair, the promoter of FSN e-commerce, and Kiran Majumdar Shaw of Biocon. Narkhede was raised in Pune, Maharashtra. By way of her own account to the press, we know the source of her inspiration in her formative years. Narkhede credits her father for playing a role in her success story. She says that in her early years, her father told her stories of women who were trailblazers in otherwise male-dominated fields. Narkhede read books about India's first female Prime Minister, Indira Gandhi. She was also inspired by Indra Nooyi, who went on to become the CEO of PepsiCo. Another inspiration was Kiran Bedi, the first woman to have joined the officer ranks of the Indian Police Service. According to Narkhede, their stories gave her a sense of empowerment. She says that learning about such women has had the single biggest influence on her career. So it is no surprise then that she decided to break into the male-dominated tech sector. Narkhede first went to the University of Pune and received her Bachelor of Science in Engineering from SCTR's Pune Institute of Computer Technology College. In 2006, she left India to get her Master's in Computer Science from Georgia Tech. After graduating in 2007, she started a job at Oracle. After Oracle, Narkhede worked as a software engineer at LinkedIn, where she was involved in the development of Apache Kafka, an open-source messaging system designed to handle the networking site's large data input. This would prove to be a pivotal point in her coming entrepreneurial life. It was in 2014 that she and 2 LinkedIn colleagues left the company to found Confluent. Headquartered in Mountain View in California in the United States, Confluent offers organizations an Apache Kafka-based streaming platform that enables them to easily access data in the form of real-time streams.
यार
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Let us move on to the markets now. At over 8.5%, equity markets clocked their highest monthly gain since August 2021. The rally was partly driven by better than expected corporate results and partly by dovish US Fed statement. As investors keep their powder dry ahead of RBI's monetary policy, let's take a look at how markets are placed for the week.
The US Federal Reserve's surprisingly dovish monetary policy, where the Fed chair announced a 75 basis point rate hike, was a shot in the arm for market bulls. The ensuing relief rally in the markets catapulted the benchmark S&P BSE Sensex 1,753 points higher in 2 days, while the Nifty 50 jumped 457 points. With this, the frontline indices clocked weekly gains of 2.6% each last week. They also galloped over 8% during the month of July, clocking their biggest monthly rally since August 2021. Going into this week, analysts say the US Fed's comment may also prompt the Reserve Bank of India to go easy on the policy tightening.
We believe RBI will increase interest rates by around 25 to 35 bips this week. This is in spite of the 75 bips interest rate hike by the US Fed, mainly on account of flattish inflation in India, which we saw in June, and also expectations of moderating inflation going ahead. Though the inflation rate going ahead will still be upwards of the RBI comfort zone, but the easing path of inflation should moderate RBI interest rate increases going ahead. For the markets, we don't believe this 25 to 35 bips interest rate increase will have any major repercussions.
Meanwhile, ahead of the RBI's policy decision, stock-specific action will dominate D Street as corporate earnings enter their last leg. ITC, Zomato, Indigo, Lupin, Vodafone Idea, Adani Enterprises, Mahindra & Mahindra, Nykaa, Paytm and Titan. These are some of the top companies slated to announce their results this week. Technically, the Nifty closed above its 50-week moving average last Friday. If it sustains the level, it could attempt to extend gains this week. A decisive hold of the 50 WMA, placed at 17,085, can push the 50-pack index towards its trendline resistance of 17,360. On the downside, 16,600 could act as a strong support. As regards the Sensex, the BSE benchmark can move in a broad range of 55,900 to 58,850 this week.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
It looks like the equity markets have priced in the prospect of the US slipping into recession. But ever wondered what exactly recession is? Our next report explains.
The US economy contracted second quarter running amid aggressive monetary policy tightening by the country's central bank. which has been trying hard to bring down decades-high inflation. As the GDP numbers became public, some experts said that the US is already in recession, while criticizing the central bank for being in recession denial mode. So what is recession? If the gross domestic product of the country shrinks for a sustained period of time, then the economy is said to be in recession. While there is no universal consensus on the exact definition of recession, economists usually see the negative GDP growth for 2 consecutive quarters as an indicator for a technical recession. Usually, a recession in the economy is accompanied by high unemployment, falling industrial activity, investments, and fewer profits. Why do recessions occur? Recessions are caused due to a host of factors that could be sudden shocks like a global pandemic, wars, high inflation levels for extended period of time, among other reasons. For instance, when the pandemic hit, lockdowns across the globe snapped supply chain, brought economic activity to a standstill, and pushed major economies towards recession. Similarly, high inflation in the economy forces central banks to raise interest rates too quickly, making the cost of credit more expensive for businesses and people. Higher borrowing costs also dampen investments as companies cut down on expansion and the economy slows down as people spend less. So what is the impact of recession? Economic downturn of any magnitude leads to job losses and fall in incomes, causing severe economic pain. The financial markets will also be under severe stress during this period.
I will achieve, I will fly high, SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The IMF recently warned that the world could soon be on the brink of a global recession as the economies of the US, China, and Europe are slowing more sharply than expected. That's all for today. For more news and analysis, please log on to businessstandard.com. We'll be back tomorrow with the next episode. Thank you for watching.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.